Hello, good people. We're back for another episode of the Tech Behind FinTech. Ready, preparing for a holiday weekend. Always a pleasure to come back on the show. My name is Nnamdi Osuagwu. I'm the host of the Tech Behind FinTech, where we discuss the technology behind the money. That's what we talk about, the technology that powers the money. So on this episode, we're going to get into some news articles of the week that we found interesting. We're going to dive into it, and then yeah, we'll look for your comments and your interaction as always. Love our guest interaction. It keeps the show alive and lively. So you know what? If you bear with me for a second, I seem to be echoing, and I don't like that. Okay, think I'm th- think I'm fine now. Still have no clue where this echo is coming from. You guys don't hear it. I hear it on my end. It's just slightly annoying. Okay, so let's jump into some news articles of the day. Not the day, really of the week. That we found interesting, as I said earlier. Let me put it on the big screen. So yeah, so what we're gonna get into the first topic of the day. Something that I found 60 interesting. So 650 US banks will soon be able to offer Bitcoin purchases to an estimated 24 million total customers as part of a deal between enterprise payments giant NCR and digital asset management firm NYDIG. Community banks, including North Carolina based First Citizens Bank, and credit unions, including Bay Federal Credit Union in California, will be able to offer their clients cryptocurrency trading through mobile applications built by the payment provider. I mean, essentially, what's happening is, for those who have cryptocurrency, we have to do it through exchanges. So, you're going to go to a Coinbase or Bittrex or Kraken or whatever, and you're basically shifting your money from your bank account over to this exchange. And the whole point of banks is to store money. So once that decreases, that obviously becomes an issue. So like a friend of mine, we always joke around and say you have to give the people what they want. So let's get into that. So essentially, basically, like I said, part of the article is, instead of having to deal with burdensome regulatory requirements related to actually holding cryptocurrency for customers, the financial institutions that opt to make this service available will rely on NYDIG's custody services. Uh, so yeah, so like I was basically saying, the effort is the latest by the Atlanta-based NCR to capitalize on the demand it's seeing from banks and credit unions tired of seeing crypto purchases made from their accounts to outside exchanges. By providing these clients as a way to buy Bitcoin and eventually spend it within their existing accounts, the traditional financial institutions are part of a rising tide of those companies in direct competition with cryptocurrency exchanges. It's basically the same thing. So just some background about founded in 1884, NCR, the National Cash Register. NCR employs 34,000 people and does business ranging from digital banking services to ATMs and restaurant point of sale kiosks in 160 countries. Actually, from January 2020 to March 2020, the company's stock tanked because of the COVID and the pandemic. They tanked 62% to 13, then riding a similar tide as PayPal and many other financial technology service providers since COVID-19 pandemic. NCR stock has jumped 238% since March, when the quarantine started, and is now trading $45.44. So interesting. So NCR generated 6.2 billion revenue from non-crypto exchanges last year. So interesting article. We're going to get into one more Bitcoin related article. So out in hold on, let me see if that should have moved. Give me a second. I'm sharing it. I'm sharing a screen. I want to kind of get it on my other screen. Give me 1 second, because I want you guys to see it. Also, if we have any comments, interactions, that's always a good thing. Let me adjust let me adjust my share screen 1 second, because I want to show you guys as I'm sharing this article. I want you guys to stop to see it actually. So give me a second while I do some technology things. I have a computer behind me. I work on as well. So I want you to see it. 1 second to make some changes. 1 second. We are making some changes on the fly here. Sorry to be showing you the top of my nose. Um, Let me share it. Because what we've been finding, it's been very useful to share, to talk to the articles, but you're also seeing it as well. So had some feedback saying people like that. So just trying to stick with that. Okay, we jump in articles here. Give me a 1 second. All right. Interesting. You guys still don't see the you shouldn't see the PowerPoint in this. You should see the should actually see the whole thing. But you know what? Not sure why it's not working. But what we can do is just minimize it. All right, that's better. Thanks for bearing with me during that whole technical snafu. Yeah, it's one of the things with going live. Sometimes you have to do these things on the fly. So anyway, yeah. So the next article that I want to get into, um, proposed legislation in Germany could allow 425 billion to flow into crypto. All right, so there's a bill that was approved in Germany's parliament last week. It's expected to take in effect July 1st if it is approved by the upper house. So what does that mean? Essentially, under the legislation, wealth and institutional investment fund managers, known as special funds, will be able to invest 20% of their portfolio in crypto. If they all did that 20% limit, nearly 425 billion would move from other assets into crypto based on the total AUM, assets under management in Germany. What's interesting about that, the legislation can prove significant development for wider acceptance to crypto institutional investments across Europe, given Germany's status as the Eurozone's most powerful economy. So definitely found that interesting. We're going to now shift gears in terms of some other articles that we found interesting. We're going to go more into the cloud space. So this is an older one, but it's kind of related to the we're seeing a lot of bank branches close, and some stats I want to read to you. So in Japan a couple of months ago, it's a bank called Mina Retail Operations. Essentially, they're going to go start a full digital bank. The core banking system will not on GCP, so it's a full digital bank deployed in GCP. And I bring this up, we talk about, if you don't know, the three major public cloud providers in the space are AWS, Azure, GCP. There are other ones, but they're the three. IBM has a cloud service too. Those are the GCP, Azure, and AWS used throughout the industry. AWS is the market leader, but we're seeing a lot of Azure pickup and also GCP. So it's because it's one of the challenging things. Especially as you being more on the technology side and also the security side, it's like, okay, how do we manage all of these different services? So coming up with, and we had a show about that, because we have situations where some clients are deployed, have multi-cloud deployments, not just one. But one of the reasons I want to bring this article is really the shift. You're really seeing banks going fully digital. Obviously, when you talk about fintechs, cloud native shops, the majority of them that I know of. So they start there. They're not really on-prem. So when we talk about on-prem, we mean what you control your own data center versus deploying these services in the cloud. So the bank's president, together with our partners, we will widely offer our banking system as a service. So the BaaS, banking as a service, we have built our system based on the ideas of digital natives and the flexible API architecture, making it possible for everyone to create and deliver embedded finance offerings. We aim to be a pioneer in this space and plan to deliver this cloud native banking system to Asia and other regions in the globe. So yeah, I mean, we touched on that last week when we talked about API security, and we talked about it in other episodes. The advantage now when you deploy it in this cloud platform, and you can open up your API gateway to other services, and then you have, especially for a bank now you can have other startups and other fintech shops start utilizing your services and creating their own business models from that. We see that all the time. So that's really interesting. So the reason why I brought this article, because it relates to something else in terms of a study that was conducted by the Economist Intelligence Unit, surveyed 305 banking executives about the future of the industry. And 65% said branch banking would be dead in 5 years, up from 59% last year and 35% in 2018. 65% of the banking executives believe that new technologies such as cloud and AI will have the biggest impacts on the industry in the next 4 years. And 81% believe that unlocking value from artificial intelligence will help differentiate winning and losing banks. So I think a few months ago, we also reported there was, I mean, if you look at the, also, some other companies using GCP, we have Citi, PayPal, Goldman, Bloomberg, Equifax, and so forth. So between the banking, the different industry leaders, like I said, using one of the three, whether it's Azure, AWS, or GCP, and also looking at the study done by the Economist and the survey, this find it very interesting where the industry is going. Definitely when we start thinking about bank closures and so forth. Okay, let me see if we have a comment. It's definitely a holiday weekend. A lot of people, I have a lot of friends who are vacationing right now, so I'm sure there's a lot of people outside right now. So we're gonna jump into one more article that we found interesting, and then I think we will start closing out the show for a quick show today. So another one, American Express partners with fintech firms to help customers find mortgages. They're partnering with Rocket Mortgage and Better. So eligible American Express customers who get their mortgages from Better or Rocket Mortgage by Quicken Loans can receive a statement credit of $2,000 for conforming mortgages or $6,000 for jumbo mortgages. Amex has tons of different partners that they've used throughout the years, which used to be more a lot around travel focus, and now they're broadening out into financial services. That's interesting for a few reasons, and I mean, I think I'm speculating at this point, but definitely the pandemic impacted probably those decisions to expand to other services. Next, Amex Ventures arm also invested in Better's Series C fund raised in 2019. The 5-year-old digital mortgage lender provides an entirely online process with no origination fees and pre-approval within 3 minutes. SoftBank invested $500 million in it earlier this year. It has a valuation of $7.7 billion. So why did I bring this article up? I found it interesting. Number one, the partnerships, and also in looking when newly formed fintechs start forming this partnership, I'm always thinking about their security posture, because long-standing companies, they have their processes in place. New startups tend to focus more on delivering the end product and then looking at security from the back end. But when you look at these opportunities, obviously there'll be tons of things they have to get in order to make those relationships. So those are the things that I found interesting. Like I said, today's going to be a quick one, relatively. So been on for like 15 minutes or so. Definitely thank everyone who's watching this. As always, thanks for tuning in on the Tech Behind FinTech. Some episodes we're just going to talk about the news of the week. Others we're going to have special topics and bring some guests on. Every week, Friday, you can definitely find us talking about these topics. Like I said, we're interested in the technology behind fintech. So, on that note, to everyone here in the US, enjoy your long weekend. To my global viewers, thanks again also for viewing, and also enjoy your weekend. I'm going to sign off now and get to my start planning out my situation. So anyway, have a great day. As always, thanks for tuning in to Tech Behind FinTech. We really appreciate it. And you have a great day. Cheers.